Welcome back to the deep dive. Today we are opening the pantry door and staring right at something that I guarantee is sitting in a cupboard in almost everyone's house. It's red, white, and gold. Costs a couple of bucks. And you probably survived your college dorm years or at least a few late nights at the office on it. We're talking about Cup Noodle.
It is ubiquitous, but if you think we are just here to talk about salty broth, freeze-dried shrimp, and nostalgia, you are in for a massive surprise.
Exactly why I want to do this one. Because on the surface, Nissin Foods looks like a legacy brand of comfort food. But when you dig into the stack of reports we have here, financial statements, analyst calls, their strategic plans right up to this week in January 2026, this company's behaving less like a grocery staple and more like a high-margin tech firm.
Precisely. It's a fascinating case study in corporate transformation. Hello, by the way. I'm an investment analyst covering the sector. For those who follow my other programs, Japan Stock Podcast in English, Byokongu in Japanese, or Honguoko for our Chinese listeners, you know I love a company that can disrupt itself, and that is exactly Nissan's story right now.
So, set the stage for us. What is the central mystery we are trying to solve today?
The mystery is defying gravity, specifically economic gravity. Over the last few years, especially through that brutal inflation period of 2022 to 2024, Nissin did something that should have been impossible for a cheap noodle company. They raised prices in the U.S. by nearly 40%, cumulatively.
And usually when you do that with a budget product, a commodity, people just walk away. They buy the generic store brand.
It should.
Economics 101 says demand should crash.
Exactly. But it didn't. They maintained volume and hit record profits. And now, in 2026, they are pivoting to something even wilder, complete meals. They're trying to convince the world that instant noodles are actually the solution to global health issues.
Okay, let's unpack this, because that sounds like marketing spin, but the numbers seem to back it up. But before we get to the high-tech health food, let's ground ourselves. Who are we actually talking about? Because Nissin isn't just one company, right?
Correct. It's Nissin Foods Holdings. It is a massive conglomerate. You have Nissin Food Products, which is the domestic giant everyone knows, but you also have Myojo Foods, which does a lot of the fresh noodle tech. You have a huge chilled and frozen foods division. They even have a confectionery arm, Nissin Cisco, making granola and cookies.
And I saw in the news just last month, December 2025, they acquired a new subsidiary.
Yes, Siri Royal. Now, this might seem boring. It's a manufacturing company largely known for ice cream and frozen desserts. It flew under the radar for most people. But analytically, this is a huge signal.
Why are they getting into the Rocky Road business?
Not exactly. It signals their intense focus on the frozen supply chain. If you want to sell high-end, nutritious frozen meals, which is their new big bet, you need specialized manufacturing capacity. Surya Royal gives them that. It's a logistics play. And we can't forget the snacks. They have a strategic partnership with Quikea, the potato chip maker.
Right, I saw a press release about a complete meal Columcho spicy chip. My brain is still having trouble processing healthy potato chips, but it seems to be part of this wider ecosystem. But the soul of the company goes back to the founder, right? Momofuku Ando.
The legend himself.
Yeah.
Invented chicken ramen in 1958 and then cup noodle in 1971. But his philosophy is what drives the current management. He said, peace will come to the world when there is enough food. And more importantly, food-related jobs are a sacred profession.
It's a heavy mandate. Sacred isn't the word you hear often in quarterly earnings calls.
It is heavy. The current CEO, Koki Ando, has taken that mandate and interpreted it as, we must disrupt our own business before someone else does. He is not a typical conservative Japanese executive. He is described as creative, aggressive, and obsessed with brand relevance.
Which explains the cyberpunk priests in their commercials, which we will definitely talk about. But I want to look at the growth story. You mentioned the inflation test. Take us back to 2022 and 2023. The cost of wheat and palm oil just goes through the roof. What happened?
It was a crisis moment for the industry. For decades, the instant noodle industry competed on volume. The logic was, sell more units, keep the price rock bottom, make pennies on the dollar. When costs spiked, most competitors were terrified to raise prices because they feared losing that volume.
Right, because if you're selling a 50-cent item, a 10-cent hike feels huge to the consumer.
Exactly. But Nissin looked at their data and realized their brand had stickiness. They initiated significant price hikes. They bet that they weren't selling a commodity. They were selling a habit, a mini luxury.
And the gamble paid off.
The customers complained, certainly. Social media was on fire. But they stayed. The revenue and profits hit record highs. It proved that even at a higher price, a cup noodle is cheaper than a fast food burger or a restaurant meal. It redefined the value proposition.
However, that leverage, that pricing power, recently got them into a bit of hot water, didn't it? I'm looking at a report from August 2025 regarding the Japan Fair Trade Commission.
Ah, yes, the fair trade bump. This is a critical incident to understand the company's position in the market. In August 2025, the Fair Trade Commission issued a warning to Nissin. The allegation was resale price maintenance.
For those of us who aren't antitrust lawyers, what does that actually mean?
It means pressuring retailers, supermarkets, and convenience stores to keep prices high and not discount them. Essentially, Nissin was telling stores, you cannot put our noodles on sale below this price.
Which is illegal. Retailers are supposed to set their own prices.
Correct. It stifles competition. Nissin accepted the warning and pledged to fix it. They implemented strict new sales rules and compliance training. But from a purely analytical perspective, putting legal ethics aside for a second, it reveals something fascinating about their power dynamics.
Go on.
You only get in trouble for resale price maintenance if you have immense leverage. If a generic brand tried to tell Walmart what to charge, Walmart would just delist them. It showed that Nissin felt confident enough in its product's indispensability to try and dictate the floor price. It was a reputational hit, sure, but it ironically highlighted just how strong their market position is.
So they pushed too hard because they knew they were the heavyweight champ.
Exactly, and frankly, the stock market largely shrugged it off. Why? Because the underlying demand is real. They don't need to strong-arm retailers to sell the product, and that's what the new compliance rules are proving. The noodles sell themselves.
Let's move out of Japan for a minute, because when I look at their reports, the overseas section is where the green arrows are pointing up the sharpest, specifically the United States.
The U.S. is the profit engine now. It used to be a loss leader market. The strategy was to sell cheap noodles to college kids and make almost no money just to keep the brand alive. That era is over. The strategy now is premiumization.
I've noticed this in my own grocery store. It's not just the styrofoam cups anymore. The packaging looks different.
Well, actually, it's not styrofoam at all anymore. As of early 2024, they transitioned fully to paper cups in the U.S. This was a massive move to remove the negative environmental stigma of polystyrene. It paved the way for them to charge more. It signaled a shift from junk to product.
So the strategy is make it look premium, make it eco-friendly, and charge double.
And improve the flavors. They are moving Americans from the 50-cent packs to premium cups that cost $2 or $3. To make this happen, they actually changed their management structure. For a while, they tried a purely local CEO model in the U.S., thinking Americans know how to sell to Americans best. Recently, they reversed that. They brought back Japanese executive oversight, Mr. Yokoyama, to sit on top of the U.S. operations.
Why do that? Isn't localization the golden rule of global business?
Usually. But Nissin realized that while the U.S. team was great at sales, they weren't connecting fast enough with the R&D mothership in Japan. Japan is where the magic happens, the texture technology, the flavor science. They needed to bring that high-tech noodle tech to the U.S. market faster. Yokoyama's job is to be that bridge.
That makes sense. Here is some space-age noodle technology we invented in Osaka. Go sell it in Texas.
Precisely. They realized the U.S. market was ready for the good stuff, not just the cheap stuff.
What about China? I keep hearing the Chinese economy is slowing down. Is that hurting them?
You would think so, but Nissin is surprisingly resilient there. In mainland China and Hong Kong, they dominate the premium segment. Interestingly, the seafood flavor is the absolute king there.
Really? Seafood?
It's the dominant flavor profile. Even with a slow economy, a premium cup noodle is an affordable indulgence. Economists call this the lipstick effect.
The idea that when people can't afford big luxuries like cars, they buy small luxuries like nice lipstick, or in this case, nice noodles.
Exactly. People might not buy a new EV, but they will buy a fancy lunch. Also, the Hong Kong subsidiary is listed separately, which gives them a lot of agility in how they manage capital there.
Now, here is a surprise I found in the notes. Europe. When I think of Europe, I don't think of cup noodle.
No, you should think of soba.
Soba. Like traditional Japanese buckwheat noodles.
Well, the branding is soba, but it's actually a yakisoba-style fried noodle. In Europe, soup noodles face stiff competition. But drain the water, fried noodles are booming. They figured out that Europeans prefer the savory, saucy style over the broth style.
That is a great example of adapting to the palate.
It is. They didn't force the Japanese menu. They found what stuck. It's a unique market where the dry noodle outperforms the soup noodle in growth.
Okay, I want to get to the part of the show where we talk about the future. Because reading these documents, I feel like Nissin is trying to undergo a total identity shift. They don't want to be a junk food company. They want to be a health company.
This is the core of the deep dive. The
Oh.
initiative is called Kanzen Meshi, or complete meal.
Complete meal. It sounds utilitarian, like something you'd eat on a spaceship.
It's descriptive. The idea is to create products, noodles, rice, smoothies, even frozen deli plates that have the perfect balance of 33 essential nutrients: proteins, fats, carbs, vitamins, salt reduction, all balanced
Hey,
perfectly.
hang on. It's still processed food, right? Isn't ultra-processed the enemy of health right now?
That is the counterintuitive part. They are using their processing technology, the same tech that makes instant ramen, to engineer nutritional perfection. They developed something called the Nissin NPS, Nutritional Profiling System. They argued that they can engineer a healthier meal than you would likely cook for yourself because they can control the exact molecular breakdown of the food.
Does it actually work? Or is it just marketing fluff to sell more carbs?
They ran clinical trials on their own employees. The data showed improvements in weight, BMI, and even blood pressure for those who switched their lunches to complete meals.
So the CEO is saying, eat our processed food to lose weight.
Essentially, yes. And this month, January 2026, they are launching the Frozen Complete Meal DELI sets. They are targeting the health-conscious but busy demographic, people who want to eat healthy but don't have time to cook and hate the taste of traditional bland diet food.
This connects back to that Syria Royal acquisition, doesn't it?
Spot on. Buying a frozen food manufacturer wasn't an accident. They need the production capacity to make these high-margin, frozen, complete meals. They are trying to make customers up a value ladder.
A ladder.
Think of it this way. Rung 1 is the bag noodle low margin, cheap. Rung 2 is the cup noodle higher margin, convenience. Rung 3, the top of the ladder, is the complete meal highest margin lifestyle solution.
And it's the only way to survive in a world where populations are aging and becoming more health-obsessed. If they stay just a salt and carb company, they die.
Exactly. If they become a tech-driven nutrition company, they grow.
Speaking of tech, I have to mention the factory, the Kansai plant.
Mm.
I saw photos of this place. It looks more like a NASA lab than a kitchen.
It's a beast. It's their flagship smart factory. It produces 1 billion units a year
1 billion.
with minimal human intervention. It's IoT, robots, automated quality checks. This is the moat that protects them. In Japan, we have a massive labor shortage. There aren't enough workers to man assembly lines. Nissin saw this coming and built a factory that essentially runs itself.
So that massive upfront cost for the robots basically locks in their future margins. Even if wages go up, their factory cost stays flat.
Correct. That cost structure allows them to protect their margins even when raw materials get expensive.
So they have the robots making the noodles and they have the scientists making the noodles healthy, but they still need to sell the noodles.
Yeah.
And this is where I want to talk about their marketing, because it is unhinged.
Unhinged is a compliment in this context.
I'm looking at these images of the golden chicken ramen mascot and these animated commercials with cyberpunk priests and demons. Why? Why go so weird?
Sheer fear of becoming a grandma's brand. Chicken ramen is nearly 70 years old. If you just play nice, nostalgic commercials, young people ignore you, you become irrelevant. Nissan's marketing rule is basically, if it's not crazy, don't do it. They need to generate buzz on social media to stay culturally relevant to Gen Z and Gen Alpha.
It's working. I see their stuff go viral all the time. It feels like they're trolling their own product.
It keeps the brand elastic. It allows them to raise prices. You can't raise prices on a boring commodity. You can raise prices on a brand that makes you laugh and feels part of the culture.
Let's pivot to the shareholders. If I'm holding Nissin stock, am I happy right now?
You should be. They have a very clear shareholder return policy. They target a payout ratio of 40% or more on a 5-year average.
That's a healthy dividend.
It is. And they did a stock split in January 2024, a 1-for-3 split. That lowered the price of entry.
Making it easier for retail investors, regular people, to buy the stock.
It broadened their base. But more importantly, look at their capital allocation. They are spending a lot on these factories and acquisitions. A traditional food company would just hoard the cash or pay it all out. Nissin is reinvesting heavily in food tech. They are betting that in 10 years, a significant portion of our diet will be these engineered, nutritionally perfect meals.
It's a gamble. They're essentially betting the farm on this health pivot.
It is. But they're balancing it with the solid cash flow from the traditional noodle business. It's a barbell strategy. Safe cash on one side, high growth bets on the other.
So what can go wrong? We talked about the fair trade warning. What keeps the CEO up at night?
The biggest risk is the complete meal bet failing. What if people just don't want it? What if the carbs are bad, trend accelerates? Think about the rise of GLP-1 weight loss drugs like Ozempic.
That's a great point. If everyone is on weight loss drugs and simply not hungry, they aren't snacking on cup noodles.
Exactly. If the appetite for carbs disappears, their core business is vulnerable. That is why the complete meal needs to work. It needs to be the food you eat to stay healthy, not the food you cut out when you go on a diet.
So they are trying to position themselves as the partner to the health trend rather than the victim of it,
Spot on.
and the U.S. market.
If the U.S. economy tanks or tariffs change dramatically, remember, we are in a volatile geopolitical era. That profit engine could sputter. But for now, the demand seems inelastic. People need to eat, and they seem to want to eat this.
So we have covered the history, the price hikes, the robots, and the health pivot. What does this all mean for the listener?
It means you need to stop looking at the grocery store shelf as static. That cup of noodles is a high-tech product fighting for its life. Nissin is a company that refuses to be defined by its past. They are aggressively engineering their own future.
It's impressive. They could have easily just coasted on nostalgia.
Coasting is the first step to dying in the consumer goods world.
Before we wrap up, I want to leave our listeners with a final thought. We've seen Nissin fill empty stomachs for 60 years. They conquered hunger in the post-war era.
Indeed.
But the question for the next decade is different. Nissin proved they could fill the world's empty stomachs with the original cup noodle. The question now is, can they convince a health-obsessed world that the solution to modern nutrition comes in a cup?
That is the billion-dollar question, and watching them try to answer it is going to be fascinating.
Thanks for diving deep with us today.
My pleasure.
See you next time.